Hey guys, it's finally October, and guess what? That means that this dividend portfolio has been up and running for about 3 months now. Now, I've been consistently investing $20 a day into 4 different stocks, so $5 a day into each one, and we're actually really starting to see some changes in the dividend amounts. So today we're going to take a look at these investments and see how each of them are performing, and also we're going to look at some of the changes that I've made recently, as well as some of my plans for the future. So let's not waste any more time and get right into it. Now, first, I do want to mention that I did not get to this right on September 30th. So this is actually a few days into October's numbers. It's actually the morning of October 4th whenever I'm recording this. So the market value for this account after 3 months is $1,282.85. Now, this is actually down exactly 1% from whenever I started. So we're pretty much even, not having gained any money as far as the performance of the stock. However, if we look at the dividend breakdown for this, then there's about $262.80 annually that I get from dividends, which breaks out to $21.90 monthly, $5.05 weekly, and 72 cents daily. Now let's go through the individual stocks that I have in this portfolio, starting with Brightspire. This is one that I invested in for just a few days before I switched over to Invitation Homes, but I do have a little bit of a holding in this one, $13.92 value. Now this is one that I may invest in once again, but I only wanted to invest in one of these two, and so I switched it to Invitation Homes because I just felt like there might be more upside potential to that one. And so I may switch back to that one in the future. Now, the dividend yield for Brightspire is actually 13.87%, so this is a really high dividend. The next one on our list is AGNC, and this one has been one that I've been consistently investing in. So I have $322.04 in this. My total return on AGNC is 4.12%, bringing my market value up to $326.80. AGNC has a very high dividend yield as well, coming in at 13.97%. So this one's bringing in a good bit of dividend investment as well. Now, just to mention, the money that I'm getting in dividends for this account, I'm not reinvesting back into these stocks. I'm using the dividends that I get from these investments to invest in different things that we will cover in other videos on this channel. Next on our list is Bito. This is a Bitcoin futures ETF and probably the most risky holding that I have in my portfolio at this time. So understand that this investment may not be for everyone. This is really highly volatile. It goes up and down quite a bit. However, it does provide a very high dividend. I've been doing some research into Bito just to find out a little bit more about this, and while it returns a really high dividend up near 50 to 60%, there are some indications that this ETF may not give you as much of a return on the ETF appreciation side to offset the gains that you're getting with the dividends. So for now, I'm content to have this as a stock. My personal opinion is that in the short term, both the stock appreciation and the dividend will both benefit me. So I'm going to stick it out for a little bit, understanding that there may also be some risk on the downside. Now, as you can see, the market return for this one actually is down 11.87%. So this is actually my biggest loser as far as performance to date. But with the dividends, it offsets that quite a bit, bringing me to almost even with this ETF. Now, my market value for this one stands at $288.74. And I am also expecting a dividend in this, as this dividend pays out monthly. Next on our list is AT&T. This is a stock that's been down for the past few years and been going down to the tune of about 30% and is currently on the recovery. This is one that I feel like the stock appreciation value is going to increase as well as the dividend. So I feel like that this is a momentum play where this one is rebounding from the previous few years. Now, as you can see, this one is actually up 10%. With the dividends, there's not much more of a gain because it hasn't paid out much in dividends as of this point. But the appreciation of the stock is actually going up decently well. Now, the dividend yield for this one is one of the lower ones at 5%. So again, here the stock value is going up as opposed to the dividends contributing, although 5% is a good dividend yield for most stocks. And as you can see on this list, I have a lot of dividends that have very high percentages, which also probably indicates that these are very volatile and move up and down quite a bit. So I'm taking a little bit more risk on my portfolio than most people probably would. But the strategy that I'm using is more of a short-term play and looking to get some gains quickly. Each of these are probably not stocks that I will invest in long-term. So here with AT&T, the market value is actually pretty high compared to all of the other ones, with $347.57 with the gains that I've gotten from the stock appreciation. And I'm not expecting a dividend payment on this month, so nothing to report there. Next on our list is Invitation Homes. Now, this one has lost 4.5% on the stock appreciation side, bringing me to a market value of about $287.27. The dividend yield for Invitation Homes is 3.28%. So again here, one of the lower ones on the list. Now, we are expecting a dividend payment from Invitation Homes this month of $2.11. So that's a nice little addition to our dividend income for the month. Now, one of the moves that I made recently was to switch over to Main Street Capital as one of my investments. In order to do this, I paused contributing to AGNC. So that one, I'm going to keep the holdings that I do have and switch over the $5 into Main Street Capital. Now, as I mentioned before, this is what I'm going to do to kind of equalize some of the risk that I have with some of the higher dividend yields. This one is a little bit more stable. And so I'm doing this to kind of balance out more my portfolio for the long term. Now, I just recently started investing in this one, and it's actually only been 1 day. And so I've got $5 invested into Main Street Capital. There's not a lot of time there to have anything happen. So there's not really anything to report here. It's just a change that I made moving from AGNC into Main Street Capital. Last one on the list is Apple. And this is just a little bit of stock that I had in there to begin with. So since it does provide a dividend, I didn't sell it, even though the dividend yield is not worth mentioning. The market value for this is only $13.54. So it's not really going to affect my account much in any way. And I may sell this one in the future just to get it off the list and simplify things. But for the time being, I'm going to hold on to this stock. For September, my total dividend payments were $14.87. However, moving forward into October, I'm expecting a little bit more than that. $23.34 total dividend payments. And that's mainly because there's just a lot of dividend activity that I have in the month of October. So as you can see, the amounts are going up a little bit at a time, and we're getting more and more dividend contribution into this account. Now, there's a couple of things that I wanted to mention here about looking to the future of this account and where I may go with it. The first being what we mentioned earlier about moving some of these transactions into some more stable stocks and ETFs that I may be investing in. For example, the switch from AGNC to Main Street Capital. Now, the reason that I would make a move like this is to guard against the stock value dropping with the stock quality maybe not being as high as it could be. However, with a high dividend payment, that does offset that sum, but in some cases, not enough to offset what you could lose if the stock value were to drop. So since I have a little bit more confidence in Main Street Capital as opposed to AGNC, I'm beginning to shift that investment over to begin to balance out my portfolio a little bit. Now, in reference to BITO, the Bitcoin Futures ETF, I've been doing a little bit more digging into that one to find out about the stability. While there are definitely more risks involved with a Bitcoin Futures ETF, the dividend payments is what's holding me there for the moment. However, there is more volatility with a Bitcoin futures ETF, and they typically do underperform a regular spot Bitcoin ETF. So while I may switch this strategy in the long term, I do feel like short term I want to hold this position. While I feel that the ETF value going up will possibly outpace a spot Bitcoin ETF, plus I'm getting really good dividend returns at the moment. So despite the risk, I believe I'm going to stick it out with BITO for a little bit longer just to continue to collect the dividend payments. The value of this ETF is down a little bit over 10%. However, the dividend payments have balanced that out to where I basically haven't lost any money. Even though the performance has gone down, the dividend payments have offset that. So this is the second video in this series. And if you're wanting to see more about the beginning of this journey, then check out this video here. And if you're wanting to follow along for more of this journey, then don't forget to subscribe to this channel and sign up for notifications so that you can be made aware whenever we have more videos like this. And again, thank you for watching. And remember, invest in those you love, invest in yourself, but don't stop there. Keep investing. Until next time.